Okay, it helps if the microphone is on. Hello, everybody. Thank you for joining us today. A huge thank you to Bitcoin MENA for putting the conference together. I think they've done a fantastic job, and a huge thank you to our panelists as well. We're going to have a really interesting conversation today, diving into Bitcoin and the global capital that we're unlocking with financial products in the space. So we have a great panel here. Huge thank you to you guys for joining. I think to start, I'd like you all to introduce yourself and a little bit of your background, because it just helps set the landscape for what you're building today from a product standpoint. So, Becca, I would love to start with you. Ladies first.
Sure. So my name is Becca Rubenfeld. I am co-founder and COO and CFO of a company called AnchorWatch. AnchorWatch provides regulated insurance. We're backed by Lloyd's of London on Bitcoin in custody. So we have our own custody solution that we think is the best-in-class cold storage custody solution. It uses a tech called Miniscript, which kind of takes cold storage to the next level of security. And then customers can get that vault fully insured up to $100 million per customer. My background is kind of big corporate America. I spent the last 10 years at Starbucks. I ran a large fintech program there. And then before that, I was doing other corporate work. I worked at Target and American Eagle, planning and buying merchandise for the stores.
Fantastic. And Henson, over to you.
Hi there. I'm Henson Orser, and I have just started an insurance company called Soter Insurance. And what led me to that is I first got into sort of financial institutions dealing with digital assets when I was at both Nomura, and then we spun off a institutional grade custodian called Komainu. And when that went operational in 2020, I went and ran it as president and acting CEO for a couple of years. Through that process of looking at insurance, but also figuring out where and how we wanted to be regulated, I got introduced to Dubai. And in visiting and meeting with the folks in Dubai, they asked me to come and be the first CEO of VARA down the road, which is the Virtual Asset Regulatory Authority, which I did for 2023 to get VARA launched. And through that, I saw the need for financial institutions to get insurance, be that D&O or custody insurance like Becca just mentioned, or even slashing insurance or proof of stake protocol insurance denominated in Ethereum. So we've launched an insurance company called Soter Insure out of Bermuda. Just on Thursday, we got our IIGB license finalized and approved, and we're off to the races. Yeah, thanks.
And Thierry, over to you.
Oh, hello. There you go. Good afternoon. My name is Thierry Adant. I'm CIO of New Market Capital and Battery Finance. We are an asset manager and specialist finance company. We manage capital on behalf of global institutions. We have two sides of the house, New Market, which is a traditional finance asset manager focused on private credit, and we established Battery Finance about almost 3 years ago now to provide value-add financial products built on Bitcoin. Actually, my colleague was here in the earlier panel describing one of our products where we're fusing real assets, like real estate, project finance, and Bitcoin. By combining the two, we can align incentives, but also improve risk-adjusted outcomes for both the borrowers and also the lenders. And my background is TradFi. I've always been in the buy side from both investment consultants, asset owners, and now our own employee-owned asset manager.
Fantastic. Now, in this conversation, we'll look at some of the objectives, expectations, and also pain points that we might see along the way as we do scale to open the door to wider global capital opportunities. But first, before we do that, I think we have to recognize that 2024 has been a monumental year from the inception into Bitcoin to where we are today. And if we look at the kind of the venue at the moment, we're seeing Eric Trump speaking on the main stage, which I don't think we ever thought would happen, 12 years ago, which is why it would be really interesting, and Thierry, maybe we can ask you, is just looking at from where we are 2008 to now when it comes to what we've actually seen, a little step back on what's been achieved before we look at where we're going ahead with global capital.
This is the first time having this conference in Abu Dhabi, but the Bitcoin industry has certainly matured. It's basically 16 years, and we haven't had what we have right now, which is an alignment from political, regulatory, and economic, all moving forward Bitcoin. That is an incredible achievement, and it's taken many presidencies, many regulatory regimes, a lot of issues along the way, but we've certainly learned a lot of lessons. There will be a lot more lessons in the future, but this industry is at a point of exponential growth. Exponential growth because look at how many people are here, but also because a lot of the key issues have been solved. And there's a lot that has been learned, and certainly a lot that we can grow from here. So let's talk about political. Having Eric Trump, the US president, that was not the case a month ago. The US is still by far the largest economy and one that dominates commerce, innovation, finance. Having them now pushing forward on Bitcoin, I'm just not going to stress how important it is. Being based in the US, we've been thinking about relocating, but now we have oxygen. So definitely encourage all of you guys, if you haven't embraced Bitcoin fully, that this is really now the time to start thinking hard about what to do in Bitcoin, how to exploit it, maybe have a career in Bitcoin, because we have achieved a lot. And we're at a point where everybody should be thinking, what am I doing with Bitcoin in my life? Is it borrowing? Is it having a career in a company working in Bitcoin? Or maybe I just want to have some Bitcoin as part of my financial portfolio.
Fantastic. And now, Becca, over to you. When we look at where your organization is and the kind of the go-to-market strategy at the moment, what are some of the conversations you're having with future clients? What kind of things are people really asking of you and the organization?
Yeah, I think we're at a stage of adoption that we're looking at normalization of Bitcoin and just thinking of it as part of your holdings, right? And so, I mean, we're an insurance company, and customers are clearly asking for custody insurance. That's our focus. That's where we've started. They're looking at their options in terms of, you know, they're gaining understanding of the asset. They're choosing to make an allocation to the asset. They're looking at the custody options. There's self-custody. There's sole custodians. There's collaborative custodians. And they're looking at all of these. And there are risks with all of them, right? And so each one of these custody models actually benefits very well from an insurance layer. And it really is this melding of TradFi and Bitcoin together. So it's all the benefits of owning Bitcoin as an asset class, but you know, we benefit from the stability of, you know, law and order and the legal system and contracts that can help provide a guarantee and a backstop for customers in case something goes wrong. And so we've been building for about 2 years, and we're hearing the message pretty loud and clear that they want both. They want to own Bitcoin, but they also want to know that if I'm going to hold this bearer asset, that if you lose it, it's gone forever, that they don't want to be destitute. They don't want a complete wipeout, this risk of ruin. They want that alleviated. So we're looking to fill that gap with high-quality insurance.
Fantastic. And Henson, I can see you nodding in agreement there. So are you feeling some of those like similar views and objectives when it comes to client conversations? And also, I'm curious, CEO of VAR previously as well. So how has that experience, how has that helped you with the role currently?
Well, I think the experience from VAR, we really went down the rabbit hole, obviously, or I did, in sort of understanding what regulations are trying to accomplish with regulatory framework and clarity. So it's not so much calling something a security or a commodity and then deciding which agency should regulate it. It's, at the end of the day, what are the outcomes you're trying to accomplish with anti-money laundering and investor disclosures and auditing and safety and segregation of customer assets. So if you can accomplish those same outcomes and have sort of equivalence or passportability around the world for these global technology companies, I think that's the end game. But we're seeing, obviously, the same convergence that Becca's seeing with also the same tailwinds, which is when you think about deposit insurance or SIPC, retail investors, savers, they know that their assets are safe, and that puts confidence in the system. And the traditional insurance syndicates wouldn't really necessarily touch crypto. They're coming into the space now, but it's sort of a now type of a moment. So that's why we launched Soter Insure. But also, when you think of traditional insurance offering fiat dollar coverage, it's against assets in custody that might be very volatile relative to, say, US dollars. So for us to be able to take Bitcoin and offer coverage denominated in Bitcoin is a really new nuance, and it's a much better asset liability match. Becca and I were talking about this last night. And then finally, sort of unlocking Bitcoin as a store of capital, right? So it's worked as a store of value, but other than lending it or writing call strategies or something like that, you haven't been able to use it as collateral to lend or, in fact, write insurance policies against it and earn a decent risk-adjusted return. So I think that helps the whole equation as well.
And this is open to the floor as well. But when it comes to the fact that Bitcoin now, we're a $1.92 trillion asset class, and this conference alone is testament to the fact that the industry is just growing and growing ahead. Is there any, well, I'm sure there are, pain points that come with the industry scaling, and how are we able to identify them just to move forward and open the floodgates, as it were?
Well, I can start. I think one thing is more products, the insurance, financial products. Having a 1% allocation, 2% allocation is great. Most people are going to start there. That's a big improvement. But certainly, Bitcoin is more than just store of value. It's capital. It's digital capital, as some other people have called it. And capital plays a role in industries, in people, and even governments. So we need more financial products. That'll be my main calling about how to start using more Bitcoin in the real economy. That comes from people like me, myself, but there's other industries that need to start thinking about Bitcoin. Maybe we'll have an announcement today from a government. Maybe we'll see some other company start announcing Bitcoin part of their balance sheet, maybe use it as a utility. But we need more utility to come out of Bitcoin and all that it's achieved so far.
I would say a pain point is access to fiat. So again, I'll speak specifically to insurance. Soter and AnchorWatch have come at it from two different angles, and I think both angles have a lot of merit. You're denominating in Bitcoin, we're denominating in fiat. So we opted to start with denominating in fiat because it allowed us to quickly access the U.S. market. It allowed us to have the name recognition of Lloyd's of London backing us, but there are limitations to that. Right, so the limitations primarily are the amount of fiat that's available to come in and back the asset itself. So as we look forward, there's a few things that will unlock that. One is insurance companies, excluding Bermuda, are not allowed to hold Bitcoin as a reserve asset. It's considered a non-admitted asset, which means that it actually impairs an insurer's balance sheet. So while they could hold it, it would severely inhibit their profitability. And so realistically, they're not going to. What that means is that there's only so much capital that's going to flow in from the fiat side in the short term. So currently, I think it's okay for the next couple of years. So we've been able to unlock $100 million per customer. We can add many, many billions of capacity to the global market. But let's say currently Bitcoin has a 1.7 something trillion market cap, plus or minus some hundreds of billions. And there's, I'm not exactly sure, but maybe 3-4 billion of specie cover currently on the marketplace. So it really is extremely, extremely limited. We'll add, a few billion, but nevertheless, we are going to run into a cap in terms of the amount of fiat that's coming in to act as insurance on this asset class that is quickly growing in value. And so I think long term, denominating Bitcoin ultimately is what allows really the global Bitcoin market to continue to access high quality insurance. We've just chosen to start with kind of the recognized name and the trusted existing industry as a way to first bring it to market.
And I would say on the there obviously are still pain points on the regulatory front. There's a lot of optimism for the change of administration in the U.S., but there still isn't any infrastructure bill or a stablecoin bill, let alone the work that needs to be done to have equivalence and passportability, so that you know if you have a global technology or a global exchange or even a global game, that where people on-ramp and off-ramp, that it's a sound system for people to get inside the walled garden. You don't have any weak links over here so that you have tainted Bitcoin or scammers or what have you. So that's still a tailwind, but it's very much going in the right direction.
And you mentioned there, when it comes to Becca specifically, you said you're able to unlock with Lloyd's of London 100 million per customer.
That's right.
And I think that it sounds remarkable.
Thank
it's
you.
very interesting to see how you're able to to rewrite these architectures that are typically in place for a fiat-focused system. So I'm going to ask each of you now, if you were to rewrite some of the restrictions that we might see that is restricting the global capital markets to be more orange-pilled, Bitcoin-friendly, what kind of things would you look to introduce?
Actually, for me, it would be the thing that I mentioned. So currently, Bitcoin cannot be held in a submitted asset. So it impairs the balance sheet of insurers. I think an enormous amount of capital would come in if they could hold Bitcoin on the balance sheet. I think it would ultimately benefit consumers really significantly, and it would benefit the companies as well. So I would say that's the primary thing I would like to see. And that's effectively worldwide. That's an issue worldwide with the exception of Bermuda itself. Additionally, I would say somewhat related, I would love to see more clarity in the U.S. specifically, on the definition of a qualified custodian. So, many here will be familiar with the concept of multi-sig and spreading out keys, which can be held across multiple institutions. And I think the technology of crypto and Bitcoin allows you to take advantage of this tech to better protect customers. So currently there's qualified custodian rules in place, but QCs have blown up, right? So just having this stamp of a QC does not actually protect the customer, whereas Bitcoin technology, the ability to distribute risk physically across multiple institutions, actually does protect customers. So if in combination with this admitted asset issue, that's the other thing that I would like to see, to just make custody better, safer, and really with the consumer in mind.
I guess from my perspective, from an asset owner and institutional capital perspective, there's two things that are really missing. They're coming, but they're missing. Number one is index. A lot of portfolios start from an index construction perspective, say a 60-40 backed by MSCI All World and Barclays Global Ag. That's my starting point for most institutional portfolios. So once we have an allocation that says part of it is Bitcoin, which is my second point, most portfolios get built from a global asset allocation perspective. So they start with saying all the assets have to be part of the portfolio. Bitcoin has now been proven over the last 16 years that it's an asset class. It's graduated to be an institutional quality asset class that should be part of the portfolio. But today is not yet. Most investment consultants, most actuaries are still have it outside. It's not inside. It should be inside. So index eligibility alongside global asset allocation construction, when people start thinking of what are the building blocks of portfolios, and obviously financial products, my earlier point, is what's needed really to accelerate, but certainly it's coming. I think this is coming in a matter of, actually it could be quarters. It won't be years now because they have the data. They have products as well, some, and it's just having them out there, but there is a process. There's a process of education. If you see all the flows right now are access products, or even proxies, not even Bitcoin ETFs have only been a success this year. There has been an ETF, not the prior panel, but one before, going back to 2021, I think, has 0 assets. But what's been successful, US ETFs, MicroStrategy, attracting a lot of flow. So once we have this index and global asset allocation, I think we're going to have a lot more interest and a lot more starting place saying Bitcoin will be a part of investment portfolios.
And Henson,
Yeah, I would just, I mean, on a couple points, there's still an accounting rule in the U.S. where banks can't hold crypto on behalf of their clients as a trustee. It goes on their balance sheet, and they have to hold capital against that, which is ridiculous, especially with the ETFs that are traded on Bitcoin. But just anecdotally, Vanguard in the U.S. has $5 trillion globally in assets under management, and they still won't let you trade a Bitcoin ETF. So it's still a product that you can't trade on the Vanguard platform, which is these are SEC approved ETFs, and Vanguard won't let you buy them. So I think there's a long way to go as it plays out.
And are we getting into a stage, you think, where as we move towards kind of more people entering the Bitcoin as financial product space, that actually the custody element of cryptocurrencies could be seen as a pain point that might need to be reassessed or just kind of democratized a little?
So my personal opinion on how custody is playing out currently is that actually there's a very concerning concentration of custody. So it's all at Coinbase. There's some secondary players, right? BitGo is a large one. There are others around the world, but a huge amount of custody is happening at just a couple of institutions. And I believe that's a systematic risk to Bitcoin, because if there were an inside bad actor or some sort of catastrophe, I think that would reduce trust in the asset class in total. And so the way we've gone about trying to do our part to address that is build a method of custody that actually encourages distribution of that custody. So our custody solution, again, it uses technology called Miniscript, but it allows us to support a customer in their custody by signing transactions with them, but they are also required signers. And what that means is it is, in fact, a form of self-custody. We have time locks, and time locks mean that after they're no longer our customer, it's actually a fully sovereign self-custody vault. And we're the first to use this in any sort of commercial way whatsoever. But what that means is that every single holder, whether they're a retail customer or a huge institution, actually is self-custodying. But they're getting the benefits of an institutional grade security layer and all the support that a company with a board of directors and investors, all those things, they want these additional layers of security, but without this honeypot risk. And so, we have specifically built trying to provide an alternative for this concentration. But because we did that, really trying to do a service to the industry, that is also what allowed us to do 100 million per customer. You called that out as an impressive number. It really is an impressive number. It's a large amount of risk per customer that Lloyd's was willing to underwrite, and the reason is because each customer holds keys. So they can be assured that any individual loss, even though AnchorWatch is involved with all these different customers, is not correlated one to each other. So we're really using Bitcoin native technology and truly integrating it with an insurance policy to give customers benefits of both worlds, if you will.
And just the sort of adding on to that, it would be, you talk about the massive numbers. Even Coinbase has 350 or probably now 400 billion assets. Yeah, what time is it? It's 450 now. But so you have this concentration risk, and it's such a small amount of specie. The ETFs, the securities have insurance at the broker-dealers, but the underlying assets aren't insured. And so I think there's also going to be ways to think about, whether it's FDIC or SIPC, of ways to say to retail investors, you're insured up, and you could say number of Bitcoin, but I'll say dollars, but you're insured up to $50,000 or $250,000, so that the people who have $100 million can figure something else out, but you ensure that retail knows that their assets are safe. So there's lots of opportunities to move forward on that.
Just going back to your question about where are we in the adoption cycle, we're very early. We're very early measuring many factors, right? How many people in the world own Bitcoin? How many institutions own Bitcoins? How many sovereigns own Bitcoin? All those answers is a very, very, very small percentage. So could it be 10% in 5 years? Maybe. Could it be 20%? Who knows what the number is going to be? But the fact that the market penetration is very low is the answer to we're very early. But that's also opportunity. Everybody hearing this message and has this knowledge should start incorporating and think about how to use it. How to use it again in their daily lives, in investment portfolios. Think about how this is going to change financial markets, insurance, investment portfolios. It has a real remarkable impact in many, many ways. Solving the monetary problem solves a lot of issues in the world. So I think we're early, but I'm very proud to be in the Bitcoin industry because it has a real impact. It's not an impact in terms of wealth, but it's an impact on addressing other problems, which I'm sure everybody here would love to see a positive change on.
So we've come a long way. We've got a long way to go. Now, I know we are running out of time, but just quickly, I'd like to ask each three of you, 2025 and beyond, what is getting you most excited right now when it comes to what is coming up next?
Well,
big question, sorry.
No, we got our license approved on Thursday. We're closing a capital raise, and we're getting a whole bunch of regulatory capital in our segregated cells in Bermuda. So for 2025, it'll be all speed ahead on us starting to underwrite a bunch of insurance policies. So that is for us specifically.
For AnchorWatch, we're humorously almost equal timing. So we're launching both to retail and commercial customers next week. So for us as a company, just very excited to be able to offer this product to customers, start underwriting them right away. And then I think in bigger picture, the regulatory issues that we're talking about, the change of administration, I'm really interested to see what comes from all of that, whether it's the accounting rule, admitted assets, clarification in custody rules. I'm very interested and hopeful to see improvements on all of those things.
Oh, and we want to give extra Bitcoin balance sheet to AnchorWatch, so their clients can have Bitcoin in excess of their fiat coverage.
We'll talk.
Exactly.
I'm excited about scaling. I think having more adoption will lead to more scaling of companies, more financial products, and that's what we need. We just need more adoption, generally speaking. So in 5 years forward, could we have many governments, maybe the US, maybe the UAE, half of the S&P 500 companies will have Bitcoin? That would be incredible. That would actually be, the S&P now has an orange hue to it. So I think in 5 years, you're going to be surprised how much change. That change, like I said at the beginning, is exponential from here onwards. So it'll be a very exciting 5 years ahead.
Fantastic. Well, each of you, thank you so much for your time today. I think we could have spoken for much, much longer, but really appreciate all of your insights.
Thanks very much.
Thank you.
Thank you.
Is your company ready for the next evolution in financial strategy? Bitcoin for Corporations is your partner in securing the future of your business. With exclusive membership benefits, our comprehensive masterclass, and a network of trusted service providers, we provide the insights and resources to help you incorporate Bitcoin into your financial strategy, ensuring stability and long-term value. Strengthen your business. Innovate with confidence. Bitcoin for Corporations, protecting your treasury and positioning you for the future.